Hello and welcome to the Cryptocurrency News channel. Okay, this is going to be the TA, FA, and MA for February 10th, 2022. And got some bad news this morning because the CPI was worse than expected. We expected 7.2, we got 7.5. So January's was about 0.3% worse than projected. Now that might not seem like a lot, but it is actually quite a lot. So right now, inflation has definitely kept up in January. They thought it was going to ramp down in January. And you know what high inflation rate means? It means the Fed is going to raise interest rates more times than we thought. They might raise it as much as 7 times this year, only about 25 basis points each. But that could actually get us to closer to 2% by the end of the year than 1% by the end of the year. Now, the Fed's goal is actually to not crash the economy. But I think they realize that if they want to control inflation, they're going to have to raise it more. And that could stoke some fears. Bitcoin was up earlier today, almost around 45,000, but that's mainly because institutions were actually buying some Bitcoin. But the continued poor performance of the stock market today, because of the inflation numbers, has dropped Bitcoin down. My expectation going into the weekend is this weekend will be bearish, whereas last weekend was bullish. Last weekend was bullish because of all the earnings reports. This weekend will probably be bearish because of the inflation reports. Now, some of that is already priced in. I'm not saying none of it's priced in, but I don't think all of it's priced in. I think some of it's already priced in. I think they priced in a 7.2%, but not a 7.5% inflation rate. However, there is silver lining because demand is strong. One of the things that's actually driving, that's one of the things that's really just actually driving the inflation rate is that the demand is very strong. And of course, the supply chain issues. Now, the supply chain issues probably won't start to hammer themselves out until mid-year, which is probably like the first real bullish time that I could actually look at. But the supply chain issues won't, but like the fact that the demand is strong kind of means that the economy really isn't that weak. Because if the economy was really, really weak, people wouldn't have strong demand. Like demand for products is higher than ever now. And if people didn't have money, they wouldn't have money to actually spend and they wouldn't be demanding stuff. So I don't think the economy is all that weak. The job market is still really, really good. The reason that companies can't find workers is not because, like there's no jobs. It's because workers want more money. And if people were desperately looking for a job, they wouldn't be demanding more money. That means the job market, there's still more jobs out there than workers, which means people can still make more money off their jobs. So people do actually have money to spend, which is a good sign for the economy. But that doesn't play well with inflation. I think once they raise the interest rate, money will tighten, there won't be as many jobs out, and people will be more willing to take what jobs there are. I think they need to even out the economy for a bit. They printed too much money. They gave away too much stimulus. If you look at the overall state of things since last week, or since a couple of days ago, it's still kind of up, but it's definitely tapered out in the last few days. Like the lows are still getting a little higher. The highs are still getting a little higher as well. Even if you look at the 1 day, I mean, we actually reached like a local top earlier today. And of course we dumped back down because of the inflation fears. But that might actually subside over the next few weeks. Now, the problem is the rate hikes are going to start coming in March, and I'm almost sure they're going to come. So I would definitely wait. For the rate hikes to actually come before I buy anything. Because if you're buying things right now, I think it is a little too risky that you're going to get screwed on the rate hikes, and they might take a small dump. If you're DCAing right now, that's fine, but I would probably DCA a little less until March to see what I can actually get then. Because I do think there will be a bit of a jolt in March. We might go back down into the 30,000 regions again. I don't think we're going to fall below 30,000. I think we actually bottomed until then. Because I think earlier this year, I think they were pricing all the expectations in. But the expectations, like the earnings and profits and jobs, have been better, whereas the inflation rate's been worse. So I think it's going to even out in the end. I still think there'll be a couple of jolts down in March where we suddenly drop into the 30,000s only to bounce back into the 40,000s later on. So I don't think we're going to go below the $30,000 mark. I think we've already kind of bottomed, but we may not get out of the bottom maybe until like early summer when the inflation rate will start to parry, when some of the supply chain issues will start to go away. So that's actually what I'm looking at right now. The trend right now, I think over the past few days is still positive. But right now, like things are starting to calm down, and I wouldn't be surprised if we dump to about 40,000 this weekend. On the technical side, right now for the daily, it's still a buy, but the 50 moving average is still less than the 200 moving average as usual. We're above basically EMA and SMAs all the way down to the 50. The RSI, the stochastic and the commodity channel index are both oversold. The momentum is saying sell, and basically like there's more sell signals and buy signals on the oscillators, so I would definitely hold back on buying. Moving average we just talked about, it's still a buy, but I do think like in the immediate future for the next couple of days, I probably wouldn't buy because the inflation reports are probably going to drag us bearish into the weekend. Of course, it does depend on the consumer sentiment report tomorrow, and also like some more earnings numbers tomorrow. That could actually boost up tomorrow, but I think the CPI is a slightly longer lasting effect. So on the weekly, everything is kind of neutral in terms of the oscillators, but on the moving averages, everything is still a sell all the way down to the 100 weeks. Like I said, we didn't really solidly break 44,000, so it's 45,000. Definitely wouldn't buy into the weekend. Probably wouldn't buy the rest of February. And honestly, like I would basically hold back until buying at least until March to see how much they actually raise the interest rate by and see how the economy fluctuates on that. I do think we will get an upturn as we go into earlier summer, as the inflation rate starts to come down, as we get better reports. If the job market is still strong, then as inflation comes down, I'd definitely be looking into a more bullish market then. On the monthly, it's going to be the same as the weekly. Most of the indicators on the 10-month EMA and SMA do say actually sell. The oscillators are pretty much neutral. So right now, like same thing, I wouldn't really buy until at least this weekend's over, but maybe not until they start hiking interest rates just to see what happens. Because we are at 43,000 right now. We have potential to go down maybe about 10,000 once those things actually happen. And you don't really want to get caught in that downturn. DCAing is still okay, but the rest of everything, I still think it favors bearish right now instead of bullish, at least for like the next like half a month ahead. Of course, earnings tomorrow's will be important, but I don't really know if anything will reverse the sentiment from the consumer price index. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.